Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, like I said, they're going to try to push this to a new record high, right? A new record high in the stock market. We've now hit a short-term top. We're going to get a little bit of a pullback, probably down to the 200-day, but they're still going to push this up higher. Mark my words on that. But we've had a little bit of a setback here. Okay, so what's happened? Well, we had the downgrade, right? Our country's been downgraded. No longer AAA rated, first time in history. So we had the downgrade, but then we had the failed bond market auction, right? Nobody wants to buy our bonds at the price we're at. So the interest rate has to keep going higher and higher. And the 20-year had a failed bond auction. The Fed comes in, they buy them, but we're now pushing up towards 5%, a little over 5%. It's going to be going higher and higher because our country is going to keep getting downgraded. Why? Well, it's because of the debt, right? Because of the debt. But what this is doing is now putting a little downward pressure on the stock market. We're going to get a little bit of a pullback here, but we're going to continue to print money. Don't get me wrong. We are never going to stop printing money. Look at people think that we're in a tight money situation. No, we're not in a tight money situation. We're like spending trillions and trillions of dollars, 3 or 4 trillion extra dollars every year that we don't have. You would think that we were in a war, right? You'd think this was wartime budget where we have to overspend just to, fight the war. Well, it's not like that. We're supposed to be in the good times. They'll tell you the economy is doing great, right? I'll tell you the economy's already in a recession, and that's why we're spending $2 to $4 trillion more. Now, the Donald was supposed to come in with the Doge boys and fix this problem. They didn't fix the problem. They got the big, beautiful bill, getting it passed through Congress as we speak, right? Okay, so this big, beautiful bill is going to add another couple $1 trillion every year onto our spending budget, right? We're spending money like a drunken sailor, so money's not tight. But we're going to get a blow-off top here in the stock market because they're going to keep spending money. Temporary little pullback. We got that short-term high, going to come down to about the 200-day moving average, and then they're going to just print it, and we're going to get that blow-off top. Now, you'll notice Bitcoin, right, hit a new record high. Now, Bitcoin also probably coming up to a short-term top here. Trading that 111, I think it's going to pull back below 100, probably back to 95 before it goes higher. It's going to make even new highs above the 111, maybe get up to 130, 140. They're going to push it up higher because they're going to print the money, right? They don't care that we've been downgraded as a country, been downgraded because of our debt. They don't care. They don't care that the bond markets are failing, right? They got the Federal Reserve. They'll go in and buy every bond there is. They'll continue to print money into oblivion, which will send the stock market to new record highs, which will send Bitcoin even higher than we are. All right, I want to talk a little bit about real estate and why people cannot pay their mortgages, right? Why they cannot pay their rent. Evictions are going up right now. The foreclosures people aren't paying, but we can't foreclose till the end of this year. Then we can put them all on the market at the same time and flush this market out. But right now, there's people are not paying their mortgages, but what they're really doing is not paying their rent. But the evictions, we're running about 300,000 evictions a month right now. Okay, so that's kicking people out of their apartments, and where they go, they either move in with family, or you'll notice homeless camps are getting bigger and bigger and bigger, but they can't afford to pay their rent. The reason, once again, is debt. Like our government has way too much debt. Household debt is at a record high, $19 trillion in household debt. Now, since 2003, household debt has increased by 81%. How much has your wages increased? 12%. Household debt increased 81%. Your wages have increased 12%. Okay, that's just an average across the nation. All right. So what's causing this household debt to keep going up and up and up? Well, you got rising housing costs, right? So people don't have money. All their money's going to the housing. They don't have money for other stuff. The cost of insurance. Insurance has doubled and tripled. California, we just are told that we're going to get a 30% across the board insurance rate. because of the fires, right? So they got to pay for that. They don't have the money. They lost the money, so they don't have the money to pay the claim. So we have to pay higher insurance costs. Okay, interest rates, what are they doing? They're going up, right, on the long end. You're going to see mortgages soon at 10%. Just my take. Listen to Barbara Cochran. Listen to Dave Ramsey. He'll tell you, great time to buy. Buy now at 7. You can refinance when they drop it to 3. Well, they're not going to drop it to 3, Dave. They're going to go up above 10. So you're not going to be able to refi. You're going to be handing that house back. What else is there? There's inflation, right? Inflation, a tax on everything. It's a tax on all the money that's in the bank, right? They tax that by taking away its purchasing power, a tax on all the money that you spend, and a tax on all your future earnings. It's an everything tax. Inflation going up higher and higher, right? And then we got declining purchasing power. That's what inflation is, a declining purchasing power, right? And now we also have record low savings rate. People don't have savings anymore. They've already blown through that, right? They've already blown through their savings and they don't have money. They don't have money that they even have to go out and finance their groceries, right? Or finance Burger King for that matter. Burger King now, you can do a buy now, pay later, not through Burger King, through one of those DoorDash type of companies, but you can buy now, pay later for your food, right? A lot of people are doing that for their groceries. They just flat out do not have any money. And what's coming? What's coming? Well, we got AI coming, right? So what's AI going to do? My opinion is going to take away a lot of jobs. Already a lot of job losses, and the jobs that are going away are high-paying jobs. Things that Microsoft just announced layoffs for a lot of people. UPS laying off 20,000. Everybody's laying off, right? The jobs are going away. Now, you see what this does is creates financial hardship. People cannot afford to lifestyle. They can't afford it, right? I mean, household debt, record high to 19 trillion, can't afford it. Something's got to break here. So what's breaking? Well, they're not paying their rent. That's starting, right? 300,000 evictions. So when you get the 300,000 people kicked out of the apartments, well, they overbuilt these apartments. Now, here's the thing. The people that built the apartments, they paid too much for them, right? So they got these apartments and they're built for luxury, right? Built for luxury. I mean, one bedroom starting at $2,500. Luxury apartments, right? And I mean, it's amazing. So they built all these and now they can't get them rented, and the ones that are in there aren't paying their rent, so they have to evict them. So eventually the rents are going to come down. They're what's going to lead the housing market lower. It's going to start with the rents, already starting with the rents. Right now in the Bay Area, you can get a good deal on rents. A lot of people are moving from where they're renting now to where they're going to be living because they can get 6 months free rent. Stuff like that is going on to where they give you a reduced rent, right? So rents are going down. And so these people that own these apartment buildings are getting their butt handed to them. They can't make their mortgage payments, right? Because they have to kick the ones out that are paying the rent, and then they have to lower the rent to get people to come in and rent, and then they don't have enough money to make their mortgages. See, on apartment buildings, those mortgages are big. Now, who owns those? The banks own those, but let's not talk about the banks. Banks are in a lot of trouble. Your money is not safe. They've already lost your money. That's my take on it. You do you, I'll do me. I don't like keeping money in the banks right now because the banks are the bag holders, right? Nobody's paying them. Look at real estate in general, commercial real estate like office buildings. Some of them are sitting completely vacant. Some of them are 50% vacant, but trillions of dollars of those are coming due to be refinanced. Now, can they refinance them? No, they can't refinance them. So what happens? They give the keys back to the bank. The bank has a fire sale. Bank is losing money with that. Shopping centers, big problem. One just went belly up in New York, $200 million. Wiped off the bank's balance sheet. You see, they had to take the shopping center back because of default on the loan. But what we got now is apartments. Apartment owners are in trouble. They can't make their mortgages. Once again, the banks are the one that hold those mortgages. And because they're not bringing in enough rent, because the people aren't paying the rent, they have to kick those people out, get new ones in, but the new ones can't afford that rent. So the rents are starting to drop, and they're starting to drop pretty noticeable, right? Maybe not in your area. Of course, not in your area. Your area only goes up. But in most areas, rents are starting to drop pretty noticeable. This is what's going to lead the housing market down. You see, what we got is a problem in the housing market. The problem is that we have a crisis that nobody can afford a house right now, okay? I mean, even the people living in the house can't afford to stay there because all their bills are going up and up and up, and they got a mortgage, so they've stopped paying that. They're good till the end of the year, but after that, we'll start to kick them out, and these will come as inventory onto the marketplace. Now, of course, you can go with Dave Ramsey. He'll tell you the market's going to only go up. I'll tell you this market's going to come down, going to start heading south, going to follow the rental market down. The rents are leading the way down. As the rents go down, you're going to see the houses start to go down. Now, in 28 states, the starter homes are now over $1 million. Now, in my area, a starter home would run you about $2 million. That gets you about a 1,200 square foot home in my area, about $2 million. They don't make them much smaller than that. I guess you could find some 2 bedrooms somewhere, maybe a 900 square foot house somewhere, and you get that for maybe 1.7 million in my area. But the point is, the starter homes are unaffordable. If nobody can get in those, nobody can move up into the McMansion. Now, people my age, they have McMansions, right? And they're getting ready to downsize, if you will, into the old folks' home, or even some of them have already died off. Some of my friends have already passed away. I mean, that's just part of life, right? But what happens to their houses? Their house goes onto the market. So you got these big McMansions coming onto the market, but who are you going to sell them to, right? I mean, the millennials, maybe they want to live in a McMansion, but they can't afford them at these prices. Now, of course, as baby boomers, we want to get this price up here because we know that our house is the best house in the neighborhood and it's worth this much money. The problem is there's no buyers up here and they're going to have to chop that price down. So that price is going to start to come down. You see, the rental market is what's leading the charge. It's bringing the prices down because the rental market, people are getting evicted from that and the rents are coming down. So instead of buying that $1 million starter home where you're going to have a mortgage payment, let's just call it, I don't know what, $7,000, $7,000 a month, right? When you can rent that same place for about $3,000, why wouldn't you just rent? I mean, that's a good question, right? Well, some people, they think rent's like from the devil, right? You want to be the owner. Well, it's a good time to be a renter right now. Look, I believe in real estate. You can get rich in real estate, but right now, no, not the time to be buying. You got all these Airbnb people, man, their hands are tied now because a lot of cities have outlawed them, and these are coming onto the marketplace. A lot of them already gone bankrupt, right? They took that course, how to be an Airbnb billionaire, and now they're bankrupt, right? I mean, there's a lot of courses you can take out there. You can take the crypto course, right? How to buy Michael Saylor stock. Soon you'll be bankrupt along with him. That's just my take. Maybe it goes to the moon. He tells you, oh, this is a great one, right? Okay. So anyways, he tells you every time you don't buy a Bitcoin up here at 111,000, you have just thrown away $13 million. $13 million you've thrown away because you didn't buy at 111 because it's going to 13 million. He'll tell you that, right? I don't know. Follow him. I think you're going to be bankrupt with him. That's just my take. That was a side note, right? So let's get back to the housing market. Houses are not affordable. Starter homes over $1 million. Those prices are going to be coming down to where people can afford them. Where the big drop's really going to be coming is in the McMansions, right? Us baby boomers, we love to live in McMansions. I had one of them at one time in my life. It was really too big for me. Brought in a bunch of people to live there. I had the whole top floor of the McMansion. The other people lived on the bottom floor. I was like the king, right? Oh, it was a good time in my life. I was a young whippersnapper in my late 20s. A lot of fun. But those McMansions, right, going to be really hard to sell because there's no buyers for them at the price they're asking. So I think those will get cut down 30, 40, 50%, maybe a lot more than that. We'll see how that plays out. But a lot of people just don't expect the housing housing market to ever fall. Well, I'm telling you, the rents are already falling in just about every area across the United States. This is going to bring the housing market down with it. As the rents go down, look, in my area, selling a $3 million house, you could rent that for about 30% of what it's going to cost you to buy. Let's say 10,000 or 3,000. What do you want to pay for the exact same place? I'd rather pay 3,000 personally and wait for that 10,000 to come down to 5,000 and maybe even lower than that. We'll see how that plays out. But I'm telling you, the rental market is what's going to bring the housing market down, because people are going to start to wise up and say, hey, I'm going to go be a renter for a little while. I'm going to sell my house. I'm going to go down to Mexico with Billy Bob. I'm going to put some of the money in real money, and I'm just going to kick back and watch the show. And it's going to be a horror movie, man. Get some popcorn, get some soda, and enjoy the show. Give me the thumbs up. I'm Tall Mike. Get out there, everybody. Have a great day, and we'll talk again real soon. Bye-bye now.